Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, March 18th, 2022. And our top story today, the Federal Reserve raises interest rates, the impact on student loan borrowing. Well, joining me now to discuss this and a lot more, Betsy Matt is the president and founder of the Institute of Student Loan Advisors. And I should also say, she, like myself, is a cat lover. Betsy, great to see you. Thanks so much for joining us on the program this morning.
No problem. Nice to see you too. Today is actually the anniversary of the day I adopted one of my cats, Alice. Today's her gotcha day.
Well, and it's also St. Patty's Day. So how are you celebrating?
Well, I've got my green on and.
Well, no, I mean, but celebrating the cat.
I don't know if she likes Guinness. I'll find out if she likes Guinness.
Okay, that's a whole different segment. We'll come back on that next time you're on. All right, Betsy, the Fed raises interest rates and want to get your thoughts about the relationship to student loan borrowing. Let's start with federal loans. What's the relationship with the fixed rate on a federal loan as a result of this rate increase for the first time in 3 years?
Well, student loans since 2006 have been given fixed rates, but those rates those rates change on an annual basis. You know, if you take the loan out this year, your interest rate is going to be different than if you take the loan out next year. Now, student loans are based on different factors than, say, mortgages are. But with that said, usually if one factor goes up, they sort of all go up. So I don't think it's out of the realm of possibility to think that somebody who took a loan out this year might have a lower interest rate than someone that might take a loan out next year. Now, loans prior to 2006 actually have variable interest rates. So there are a lot of student loan borrowers out there that are carrying loans that have variable interest rates, and come July 1st could certainly see those rates go up.
Sorry to interrupt you on that. What are we talking about in terms of, do you have a sense for the number? There's $1.6 trillion, I know. That's the number for outstanding student loan amounts, balances. But do you know the portion off the top of your head that's susceptible to this variable rate?
I'm afraid I don't, because the other piece to this is that one way that you can lock in, if you have a variable rate federal student loan, and the rates are low and you want to lock in that low rate, you can do that by consolidating in the direct loan program at studentaid.gov. So it's not just a matter of what percentage of loans were taken out before 2006 versus after. There's going to be a big chunk of people that took them out pre-2006 that have since consolidated to lock in a low rate that they were enjoying.
We're going to talk about refinancing, whether you should or should not, in the second segment. But what about origination? Let's talk about all those wonderful children and adults who are going to be going to college. They're going to be looking at student loans. What, other than interest rate, which is important because that's the cost to borrow, what should they be thinking about now that we're in a kind of a new interest rate regime?
Well, I mean, of course, some things don't change. You should never borrow more than you are going to be able to afford to pay in a monthly payment, especially, usually people take at least 10 years to pay the loans back. Most, if not all student loans, in addition to the interest, they also have, sometimes they're called origination fees, sometimes they're called default aversion fees, sometimes they're called processing fees that adds to the overall APR of the loan. So those are other things that people should be looking at. How generous or what's the flexibility if there is a financial crisis? Are there lower payment options? Are there opportunities for forgiveness if you should become disabled or, God forbid, pass away? That's why having those options available to you is why I almost never recommend that someone take out a private loan. I always steer people towards federal student loans, even if they have a higher interest rate, because as you point out, interest rate is not the only factor to consider.
Yeah, I mean, you have to think about all the things you talked about, but also the organization from which you are borrowing, right? Or from whom, whatever the right proper word is there.
Yeah,
Betsy,
I mean, it
wanna
doesn't
ask-
matter how low the interest rate is if you can't afford the payment and they don't give you any options and you're going to default.
That's right. It's just like buying a car or anything else, right? You got to figure, or a mortgage. You got to figure out what you can afford, how that fits into your budget, and what does that fit in? What are you going to earn after you leave college, right? That's going to be important. So if you're going to be a teacher, does it make sense to spend all this money when your salary is going to be X, even though teachers do great work? Betsy, last question before we go to a commercial break. Let's talk about the restart of the student loan payments. And I think last time we chatted about a month ago, there was a hard date. I think it was May 1st. Is that right?
May 1st is correct.
May 1st. So is that still set in stone, or are you hearing some grumblings that it might be extended?
It is still May 1st, but I am hearing rumblings actually on both sides. Yesterday or this morning, Patty Murray, who's a Democrat from Washington, issued a proposal that in part would extend the payment pause through 2023. On the other hand, yesterday, there was a group of Republicans that issued a statement demanding that the loans do go back into repayment on May 1st. So we're in sort of a tug of war with this now. I do think that based on a statement made by Biden's chief of staff a few weeks ago, I do think, if I was a betting woman, I would give it 80-20 odds for there being another extension. Probably, in that extension, my guess would probably go to the midterm season.
Yeah, I would agree. Just politically, if you're taking away all the other things, politically, it's advantageous to do that. And let me ask you this: I mean, with inflation, we have supply chain issues. I don't know where you are up in Massachusetts, but where we are in Charlotte, North Carolina, gas prices well above $4, food prices getting more and more expensive. That could really tip the scales into the favor of extending.
That is definitely something to be considered. The flip side, though, for the people that are against extending the pause, and this is something I've been saying right along, I do think that this relief was absolutely needed and pivotal, and I was a big fan of it. I am a big fan of it. However, there's always a con. There's always a con side of the pro and con list, right? And the longer we go with this pause, the harder it's going to be to get people back into the habit of paying. So even people that had no struggles at all prior to COVID may find themselves struggling to get back on track because of lifestyle creep, or just, there's a lot of studies that show that a big indicator of successful student loan management is simply having the habit of making the payment. And, we're going on 2 years where we've taken people out of that habit. So that's definitely something that should be thought about robustly as this decision is being made.
Yeah, let's talk about that when we come back from the break. When we come back, we'll talk more with Betsy about a possible extension on making loan repayments, the restart of that, and also should you refinance your student loan if you can. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report, both absolutely free for calling Annuity General today.
Call 800-504-8194.
Welcome back. We're talking this morning with Betsy Matt. She's the president and founder of the Institute of Student Loan Advisors. Betsy, thanks so much for staying with us this morning.
Yep, happy to be here.
All right, before we get into should you think about refinancing, that's a big should with these interest rate changes. Let's carry over the conversation about behavior and just that general restart. And I agree, if the longer this goes out in perpetuity, the harder it is going to be because of human behavior to restart making payments. I mean, it just human behavior dictates that.
Right. And the other variables out there is that there's been a lot of other things going on in the student loan industry during these 2 years, not the least of which is several very large student loan servicers have left the business and therefore transferred their loans to other entities. So in addition to borrowers losing the habit of making the payment, some of these borrowers may not be aware that their loans are no longer that their loans have transferred to another servicer. And if the borrower has moved, they may not have thought to update their loan servicer with their current contact information. So all these things together put them at a higher risk of delinquency and default, which is obviously something we want to avoid.
So if you're watching the show and you do have a student loan, Betsy, it's best to log in, make a phone call, double check that they have that your student loan servicer, it's not funny, I just say that as an aside, that the student loan servicer that you are using is still around, or did they transition? And also make sure your address, contact information is updated so you're getting proper notices, email addresses, etc.
Absolutely. And if you go to log into your servicer and find out your loan's not there and you don't know where your loan went, you can log into the Department of Education's website, which is studentaid.gov, and that will tell you who is currently servicing your loan. On a related note, and I'm just as guilty as this these days. You pay your bills online and so on, and you don't open all your mail all the time. Maybe you don't even open your emails because, that bill's on automatic pay or it's on pause. People with student loans should be getting in the habit of opening all the things all the time, because that's how you're going to be able to keep track of when the payments are due, when you should be submitting lower payment applications if you need them, whether your loan is moved, etc. So student loan borrowers should be opening all the things.
Yeah, and that's by the way, Betsy, that is on top of if you have a 401k, if you have an IRA, making sure that all that information, make sure you have a beneficiary on file. All those things are important. You've got to be an active participant. All right, Betsy, let's get back to this interest rate change. And if you do have a variable rate student loan, how do you make the determination whether or not right now, or when rates do go up, it's the time to refinance to avoid paying more for that student loan?
Well, first we need to make sure that we're speaking the same language. So there's, as we've mentioned, there's two primary types of student loans. There's private student loans and there's federal student loans. People ask me often, should I refinance my federal student loan into the private loan program to get a lower interest rate? And I almost always say, hell no. And the reason for that is if you refinance your federal loan out of the federal program, first of all, there's no going back. They don't do take backsies. But you lose all the federal benefits and protections that are unique to the federal loan program. Lower payment options, access to public service loan forgiveness, discharges for things like disability and death. Most, if not all of those things, are rarely, if ever, available on a private student loan. Now, if you have private student loans and are wondering if you should refinance now to get a better rate, I certainly would start looking into it now based on the fact that interest rates are likely to go up. Keep in mind that getting a lower interest rate on a private student loan through refinancing is a little bit different than refinancing another type of debt. They aren't just looking at your credit score. They're not just looking at your debt to income ratio. The refinancing companies that tend to offer the best deals are very picky. And they're looking at things, including your credit score and debt to income. They're looking at, did you graduate? What degree did you graduate with? Sometimes even what school did you graduate from? So it's always good to shop around. And if you are considering refinancing your private student loans, it's a good idea to shop around and see who might be able to give you the best deal.
Yeah. Last question, Betsy. People can always go to freestudentloanadvice.org. That's your organization's website. But I want to ask you about if they're working with a financial advisor. Is it your sense, and I know you do a boot camp that's been very popular for FAs and professionals to know more about this, but is it your sense that if someone is working with a financial advisor to manage their portfolio, their retirement savings, their investments, are they aware of all these things, these intricacies that you're describing to us today?
It's an interesting question. I am finding that more and more financial advisors are starting to take an interest in educating themselves about the nuances of student loans. It was actually financial advisors that asked me to create the student loan counseling boot camp so they could make sure they were providing the right information. But I have also seen sort of every level in between. I've seen some that say, you know what, I don't know anything about student loans and direct them to another resource. Unfortunately, I've seen some that know just enough to be dangerous and have given incorrect information to borrowers. They don't recognize that student loans as a instrument of debt are so different from the other types of debt that people in that industry may be used to. But the other thing is that up until fairly recently, financial advisors and wealth managers would tell me that they very rarely ran into a client that had student debt, and that has changed significantly. So I think that's part of the trend that I'm seeing, where financial advisors are looking to be able to, they want to be able to provide holistic guidance, including guidance on student loans, which is why they're coming to this boot camp.
Yep. Well, they can certainly get more information on the boot camp I'm going to call it Betsy's boot camp, and I know it's something different. Betsy's boot camp, they can check it out on freestudentloanadvice.org. Betsy Matt, always a pleasure chatting with you. Thank you so much, and enjoy the rest of your day.
Thanks for having me. You too.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to see our latest content? Search our archives. Well, check out our website. That's www.broadcastretirementnetwork.com. And our streaming partners like Amazon, Samsung, Roku, and over 100 more. We're back again tomorrow with a look back on BRN Weekly. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
But if you're tired of the same old
Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a tax doctor now for a tax emergency analysis.
Call 800-224-6439.